Hi, my name is Carol Peugeot, and welcome to Innovate Training. This is Miss Carol's refresher course, and right now we are in Introductory to Accounting on Lesson 5. And what I wanted to do real quick before we get into the lesson, I want to do a quick overview of what we've covered so far. So, we did Lesson 1. In Lesson 1, I did an Introductory to Accounting, and I went over terminology and some concepts. And that was a PowerPoint, which you should have received a copy of that in the notes. So go back to Lesson 1. Lesson 2, I went over the accounting equation. We did some exercises where we balanced the accounting equation. Remember what that is? Assets equals liabilities plus owner's equity. Okay? And then Lesson 3, I introduced the T accounts. The debits and the credits, and how to balance with the T accounts. Lesson 4, we did the T accounts again, but we balanced with the accounting equation. That's what we did Lesson 4. And then today, Lesson 5, we're on the T accounts, and we're going to be journaling with the T accounts. So, with that said, I also want to remind you this is a full accounting course, and this is offered to you free. I'm going through the very beginning, all the way through the all the way through the concepts that you need to know for basic accounting. So I've given you 5 lessons, so today will be 5 lessons, and we'll continue. I'm also giving you the materials and the worksheets that you need. So please, if you haven't checked out lessons 1 through 4, please do. And make sure that today you get a pencil, good pencil, or a mechanical pencil, and download the sheets that you need. We're going to need it's called Lesson 7 Mini Demonstration. Down there in the notes, it'll be there. And then you'll need a T account template as well as a journal sheet. Okay? So, with that said, let's get started. Okay, so here we go. So this is the sheet that you're going to need. This is the exercises, the exercise sheet that we're going to work on. It's called Exercise 7 Mini Demonstration. And it's got fewer exercises on it so that we're not here for an hour and a half doing this, so we can get to the point and do this. So you'll also need a T account template, same thing we've been working on for the last couple weeks, as well as a journal sheet, and they're both going to be down below. Journal sheet looks like this. Now you guys can use a pencil. I'd advise you to do that. Remember, these are just worksheets. I'd advise you to use a pencil because it just makes it easier if you have to erase. I'm going to use a pen because it's very difficult to see the pencil for the camera. So that's the only reason why I'm using a pen. So if I make a mistake, well, poo on me. I'm going to have to start the video over again, aren't I? Okay, so let's get started. Now, what we're going to do today is the same thing we've been doing, except we're going to do an extra step. So the extra step is we're going to be journaling. So I'm going to put my journal right here, and I'm going to get my T account sheet, and then I'm going to get my T account exercises sheet. Now, remember, these are our accounts. So the first thing we need to do is we need to fill in our T account template with our accounts. So remember what accounts go where. Over here, under assets, we have cash, software, supplies, supplies, equipment, and accounts receivable. And EGS stands for Fish and Game Services. That's the name of the company. that has an account with us. Okay? Over here, we have accounts payable, WTCS. That's with the WTCS is with the, oh, here it is, Web Tech Computer Supply. Okay. All right. CWS Capital, CWS Withholding. These are owner's equity. Capital goes here, withholding comes here, and fees income goes here, expenses goes here. Remember, the positives go here under this side. I'll just put a plus sign and a negative. And the negatives go here. So anytime we're adding to the owner's equity, it goes under here on the left. Anytime we're taking away from owner's equity, it goes here on the right. It could be, the reason why, because the debits and credits are different. We don't want to make the mistake of putting them all in the same category, because then our balance is going to be off. All right, so I'm going to start with our cash. So remember, cash is always the biggest account. So I'm going to start with cash. And I'm going to put the account number 101. And I'm going to make a T. And then I'm going to continue filling in my assets. And then accounts payable, liability, and then the owner's equity. Okay, so I have completed my T accounts here. And let me go over these with you. I have, first of all, what I did is I counted how many accounts I have here. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so I have cash, software, supplies, equipment, and accounts receivable. My liability, I have my accounts payable. Owner's equity, remember, capital, and fees and income. Oops, I forgot to put the account number for capital. 301. There you go. And then under fees, expenses drawing, I have withdrawing and utilities expense. 302 and 503. 302, 503. So let's make sure we have enough the T accounts. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So we're good. All right. So let's get our transactions here. Our transactions start for the year 2021 in June. So the first one is June 2nd, Cliff transferred $25,000 from his personal savings into Cliff's Web Services Incorporated. That's the CWS Incorporated. Okay? So what did he do? He brought $25,000 over from his own personal account into the company. So we have a debit and we have a credit. So that money is now cash that belongs to the company. So how do I debit, or what do I debit and what do I credit? Well, cash, in order to increase cash, we have to debit it. Remember, we always record the debit first. So 25,000. All right. Now we need to credit something. He brought that money into the company. It wasn't there before, so he brought it in. So now he has $25,000 of capital into the company. And how do I increase the capital? I credit it. So 25,000. Okay, so this is where we're going to do something different. Now we're going to take our journal sheet. Our journal sheet, we're going to put the year 2021. we're going to put the day, the month, June, and we're going to put the day, 2nd, like that. And on the journal sheet, you always want to record the debit first. So the very first thing is that you're going to see on the debit for each transaction. Remember, it's dual entry, so every transaction has at least 2 entries. So you're always going to see the debits first. So what did we debit? We debited the cash. So here I'm going to write cash. And then over here, there's 2 places. There's debit and a credit column. So that $25,000 is going to go under the debit column. So 25, 1, 2, 3. And this is the cents column, and I'm just going to put a line there because we're not dealing with cents at this time. We will in the future because accounting isn't nice and clean like this. Okay? So we just debited the cash, $25,000. All right. What other account got affected? Our capital, right? So from here, I'm going to indent a little bit, and I'm going to write CWS for Cliffs Web Services, capital. And do we debit or credit it? We credited it, right? So $25,000 goes here. So now we have finished our first journal entry. Okay. It's not posted yet. The account is not, or the transaction is not considered posted until it gets to the ledger, which we're going to get to next lesson. But it's now recorded in the journal. All right. Let's do the next transaction. I'm going to put this aside. The next transaction, the software purchased on account for $3,460, and a printer was bought on account for $938 from WebTech Computer Supply. So this one is one of those transactions I was telling you about a couple lessons ago, where it's going to have 3 entries. Remember I said an account has to have at least 2, but it can have 3. And now I'll explain that. So what happened here? We purchased computer software and we purchased a printer. But we did that on account. So our cash is not going to be affected. But what is going to be affected is we now are taking home some software as well as a printer. So we have debit. We're going to increase our assets by our software, right here, our T account for software, $3,460. And our printer was $938, so the equipment, $938. So I just did 2 transactions here under assets. Now, I didn't pay for these, so now I have to pay for them in the future. So it becomes a liability, accounts payable. And how do we increase an accounts payable? We do that by crediting it. So how do I credit it? I write it on the right-hand side. But what do I write there? Well, when the company, WebTech Computer Supply, when they add it up, they're going to add up these 2 numbers. And that's going to be our balance. So $3,460 plus 938 equals, so our accounts payable is now $4,398. Okay? So now let's go to our journal. Our journal, we're going to go over here. We're going to skip a line. We're going to write the date. Let's see, what date was that? That was June 10th. I don't need to write June again. All I have to do is write 10. I skipped a line. And which account got debited? The software and the equipment. So I'm going to write software. And I'm going to put the amount for software, $3,460. And then equipment, I'm going to not indent because these are both debits. $938. Okay. Now I'm going to indent for our accounts payable. And that is going to be a credit, $4,398. Oops, I was supposed to go down, I'm sorry. 4,398. See, this is why you need a pencil. So, let's say I was done. And I needed to balance. Remember, these two need to balance, debits and credits. I would add this to this, and that would be the same as adding this to these two numbers. It would still balance, even though these two numbers are different. The 3,460 and the 938. Add these together, it equals 4,398. So that's a 3 entry. It's called a multiple entry. Okay. So let's put the journal aside and put the T account aside for a minute and go on to the next one. Pam's Auto Service paid by check $450 for web services. So they paid us $450. So what got debited, what got credited? Well, we received a check, so our cash increased. So we debit our cash. So $450. And then, what else? What gets credited? Over here under fees and income. Credit, $450. Okay. Bring the journal over. The date. The date is June 9th. That should have been the other way, that's okay. Cash got debited. $450. And then fees, income. $450. Now, they wrote a check. The check was number 202. I'm going to write down here, underneath in a line below, check number 202. And leave it at that. Okay? Put these aside. Check that date off. Okay, well, let's continue. The next transaction, the Fishing Game Store purchased web services on account for $4,890. Okay, so they purchased web services on account. So does cash get affected? No. What gets affected are accounts receivable, because they haven't paid yet, but they're going to pay. So our accounts receivable is going to increase. And accounts receivable is an asset, so we increase it by debiting it. $4,890. And what account gets credited? Remember, this is income. Even though it's not money we received yet, it's still accounts receivable, and it's still an income that comes in. So we're going to increase our fees and income by crediting it. $4,890. And then we'll bring our journal over, skip a line. The date is the 14th. So I'm going to write 14 here. So again, notice I'm not writing June every time. It's not necessary. And not until we finish the month and we go on to the next month. So the first account that gets written is the debit. That was the one that is an asset, the accounts receivable. So I'm going to write AR, Fish and Game Services. And then over here was $4,890. And then what account got debited? Our fees and income. So I'm going to write fees and income right here. I indent, remember? $4,890. All right, I'm going to put my T account aside, my journal aside, and I'm going to check that one off. Next transaction. I bought printer paper and office supplies from the office supply store with check number 205 for $445. Okay? So basically I just went to the office supply store, bought the office supplies, and paid by check. So what accounts get credited? What accounts get debited? Well, when I came home with a bag of supplies. So our supplies got increased. So $445 for supplies. And in order to get those supplies, I had to write a check. So when that check hits the bank, it's going to come out of the cash. So that account gets credited, $445. So this is one of those circumstances where we're trading one asset for another. So we'll bring the journal over, skip a line, write the date, which is the 18th. And what account got debited? That was the supplies. $445. What account got credited? That was the cash. $445. So it looks like that. And I wrote a check, right? Check number 205. So right here, I'm going to write check number 205. Okay? All right, I'm going to put these two aside. Go to the next transaction. Cliff withdrew $5,300 for personal expenses from the company. Okay? So he took money out of the company for his own personal expenses. It's his right because it's his money. So what accounts get credited, what accounts get debited? Well, in order to take the money out, he has to withdraw it. In order to increase the withdrawal, we're going to increase it by debiting it. So 5,300 under withdrawing, and then we're going to credit an account over here under cash, because we're going to decrease our cash, 5,300. Now we're going to get our journal. The date is 18th. We're going to increase our withdrawing by debiting it, 5,300, and we're going to decrease our cash by crediting it, 5,300. Check that one off. Next one, received a payment from FGS Food and Game Services on account. So in other words, they are writing a check to us paying on what they owe us. So we received a check from them, so our cash is going to increase. So therefore we're going to debit our cash. And this should say $450. All right, which means what accounts gets credited? Well, they paid on their account. So they have an accounts receivable account with us. So we're going to decrease their accounts receivable account. So we're going to credit that. So it's another circumstance where we're trading one asset for another. We traded part of our accounts receivable for the cash. Journal. Skip a line. The date is the 20th. And we increased our cash. So we're going to debit it, $450. And we decreased our accounts receivable, sorry, not payable, receivable, FGS Food and Game Services, $450. And did they pay by check? Yes. So check number 332. So it should look like that. Okay. Put this aside. Check that one off. All right. 2 more transactions. Okay, next transaction. June 27th. CWS. Store receipt totaled to $6,250. In other words, Cliff's Web Services, his store received, the store receipts totaled $6,250. So that was deposited. So what accounts get credited, what accounts get debited? Well, our cash gets increased, right? So $6,250. $6,250 gets increased, and that was fees and income, right? So we're going to credit that, $6,250. Bring our journal over, skip a line. The date was the 27th. We increased our cash, so cash goes first. $6,250. And we credited our fees and income, our owner's equity. $6,250. Cross it off. Last transaction. We paid the electricity bill for the month, which is $521. Check number 208. So we had to pay our electricity bill, so this is an expense. How do we increase an expense? We increase an expense by debiting it. So utilities expense, $521. And that comes out of our cash. We reduce our cash by crediting it, $521. Bring our journal over. Okay, but the date is the 30th, I believe. Yes, 30th. Always skip a line. The utilities expenses are the ones that got debited. And then cash is the one that got credited because it got decreased. And we wrote a check. Check number 208. Okay, so we have completed our transactions, but we are not done yet. We have two processes to do. We have to make sure our journal balances, and we have to make sure our T accounts balanced with the accounting equation. So here, let me show you something real quick. Let's say I added up our journal, and they balance the debits and the credits. That's great, but this doesn't show me that if it balances with the accounting equation. It doesn't tell me if assets equals liabilities plus owner's equity. It just tells me that the total debits equal the total amount of credits. And that's great, but it's not enough. That's why we still need to do the T accounts, because this is going to tell me if our accounting equation equals. So, what I want you to do first is I want you to do the T accounts. I want you to add up your cash, your debits and your credits. Remember, you put the balances, add them up, and then you subtract from the cash, you subtract the credits from the debits. If you only have one number there, then that is your balance. I want you to do the same thing with liability, same thing with owner's equity, and then balance them out. And then when I come back, we'll do the bottom. Okay, so here's what I did. Remember, we did this last time. Added up the debits and the credits of the cash. Remember, you always take the credits away from the debits, because credits are a minus. So I added up the debits. I got $32,150. I added up the credits. I got $6,266, and then I subtracted that from that $32,150, and I got $25,884, and I double-lined it, saying that that's my balance. And then the same thing with the software, $3,460. The equipment, $938. the supplies, $445, and then the accounts receivable, I took that $450 and I subtracted it from that $4,890, and I got $4,440. Okay? Now, I need to add all my assets together. So, I added all the numbers that had a double line under them. The 25,884, 3,460, 938, and then 4,440. And I got a total of $35,167. That's my total assets. So, in order to be equal with the accounting equations, the assets equals liabilities plus owner's equity. So my assets have to equal my liabilities plus the total of the owner's equity. Plus the total of the owner's equity. Sorry about that. All right. I added up my liability. Okay, so here's the equation. 35,167 equals $4,398. That's the liability. Now, how did I get owner's equity? Remember, that's a little bit confusing. Positive and the negative. I added up the positives, the capital, plus the fees and income, and then I got $36,590. I wrote that right here. And then I added up the negatives, the 5,300 and the 521. I got the 5,821. So this number has to be this number has to be subtracted from this number, because that's the negative, right? And that equals $30,769. Okay, you see how I got that? I totaled my owner's equity, the positives, and I totaled the negatives. I've subtracted the negative amount from the positive amount, and I ended up, the positive amount from the negative amount, and I got $30,769. So here's the equation. Assets equals liabilities plus owner's equity. So let's see if it equals. So we'll take the liability, 4,398 plus 30,769 equals $35,167. So did I balance? Yes, I did.
Yes, you did.
35,167. The total liability plus owner's equity, 35,167. So what does this tell me? This tells me that I put the numbers in the right place, not only under debits and credits, but in the right place in the accounting equation. That's what it tells me. It tells me more than what the journal sheet tells me. So now what I want you to do, we're almost done. I want you to add up your debits and add up your credits. Down here on the bottom, I want you to write the balance and put a double line underneath it. Okay? I'll come back when you're done. Okay. So what I did is I added up the debits, and then I added up the credits, and I put the balances down here, and they balance each other. $47,704. $47,740. Now, remember, even though we had a different entry right here, because we had 2 and we had 1 here, but these two numbers equal this number. So it's the same as putting this number in there. So that may happen from time to time. You may have a complex entry like that where there's more than 2 entries. But there'll always be at least 1 debit and always be as more than 1 credit. Okay, it's always exciting when we balance. Okay, that was always exciting when we balance. Yay! So that concludes lesson 5. We will move on. Our next lesson will be lesson 6. We will be posting to the ledgers. And posting to the ledgers will be where we start officially entering information into the accounting system. So, this is Carol Peugeot from Innover Training, and this is Miss Carol's refresher course, and I'll see you next time. Bye-bye. Hi, this is Carol Peugeot, and don't forget to subscribe, to like, and to hit that bell because we got a lot of good stuff coming. All right, see you next time.